Good morning to one and all. I am Mrs. Sonia Sriram and it's my immense pleasure to serve as the anchor for the International Conference on Banking, Accounting and Business ICBAB 2026. Our first presenter, Dr. L. Santhosh Kumar, with title Historical Perspectives on Banking System in Kerala. Present the paper. Over to you, sir.
Good morning, all of you. My title of paper presentation is Historical Perspectives on Banking System in Kerala. Historical Perspectives on Banking Kerala is a responsibility of assessing banking system in Kerala. It is a process of identifying, analyzing, and mitigating some risks. These risks are production risk, price or market risk, financial risk, legal risk, and human risk. Essentially, it involves uncertainties and the potential for financial loss of the people, and it hopes achieving some profitable outcome in future. This concept is fundamental to several areas of economics and finance and underpins the decision-making process related to investments, entrepreneurship, and insurance. This smooth functioning of economies regards credit crisis, global accessories, COVID-19 pandemic, and more recent collapse of the banking system in the US and Singapore in 2023 major setbacks of banking sector. And it is anticipated in 2025 and major setbacks of the banking system it is anticipated in 2025. And some functions of the banks come under unpredictable. The banks are immediately get ready for these longer term changes and swap with the constraints demands and effective risk management and vital banks to ensure financial stability, efficient capital allocation, trust, reputation, optimize the returns and long-term growth and sustainability in involving such challenges. Banks employ systematic process of identify, access and mitigate various risks such as credit, market, operational, liquidity, interest risk and compliance risk and ensure stability and sustainability. Banks follow structured risk and management process involving risk identification, assessment, measurement, mitigation, monitoring and governance to manage potential threats to enhance the operational reliance of the banking system. The banking system in Kerala manages to refer to the proactive and continuous process of identifying, assessing and controlling risks backed by day-to-day efforts of the people and operations in the goal of ensuring stability and sustainability. Banking system in Kerala is a process, and banking typically involves the following steps through risk assessment, banks' insights into the potential threats for financial stability and operational resilience. The risk assessment involves evaluate the potential impact of the livelihood of each identified risk. The quantitative methods and statistical models to quantify risks are potential for financial crises and financial losses. Qualitative and quantitative assessments of the consider the broader factors such as regulatory changes, market conditions, and emergency other threats. Quantifying potential impact of the risk of the financial terms critical for effective risk management. By measuring risk, banks are prioritize their response and allocate the resources accordingly. The measurement facilitates better decision making. Banking systematically manage their risk and optimize their risk return profile. Strategies are implemented for reduce some controlled risks. These strategies include the diversification of assets, setting risk limits of the various activities, employing earning risk mitigation techniques used for financial instruments and various manage specific risk. Diversing the portfolios and involving effective risk of the management tools, banks are aims to minimize potential losses and protect their capital base. Continuous monitoring banks' risk profile is essential to protect the risk of the management, assess effectiveness and mitigation strategies to approach based on changing market conditions in the sector. Reporting the risk management activities crucial for so-called providing some transparency and accountability regarding the bank's risk export, some risk management. Some strategies are implemented to reduce control risk. These strategies can include diversification of assets, setting risk limits of the various activities, employing the risk mitigation techniques and the financial techniques like derivatives and some specific risks. By diversifying portfolios, employing the effective risk and the management tools, banks aims to minimize potential losses and protect their capital base. Continuous monitoring banks' risk profile is essential for protective risk and management. Banks are regularly assess the effectiveness of the risk mitigation and strategies and approach based on changing market conditions and also useful for emerging risks. Reporting the risk management activities is crucial for stockholders, providing transparency and accountability regarding banks' risk ensure risk management. Banks must ensure compliance and relevance regulations and internal policies to mitigate legal and some reputational risks. The governance frameworks emphasize the risk outside internal controls and the risk capture, fostering the risk aware organizational culture and promoting accountability of the levels of the institution. The issue of the risk management in the banks becomes the center of debate in the recent financial crisis. Several efforts have been improved through risk management and performance in the banks, including introducing Basel Accords. The State Bank of Pakistan issued risk management guidelines to strengthen their risk management system to improve performance of the local banks. The available data of the Pakistani context impact of this performance of the banks are empirically effectiveness of the risk management process and the relationship in the performance of the banks. This study reviews the relevant literature, banking system management and methodological stance and symbolized conclusions addition to available knowledge. But addressing the certain research gaps, risking the risk management performance in the developing countries, especially in Pakistan. On to empirical nature, current research gaps and deductive reasoning approach of the testing. The study applies mixed method of research strategy on banking, quantitative method for major components and qualitative method plays supplemental role. This sample is composed of 20 banks of the Pakistan bank strategy in respect of different data. For study collects the analysis of primary and secondary sources for concluding my topic historical perspectiveness of banking system in Kerala. Okay.